that Bill Ackman and Carl Icahn brawled live on CNBC over Herbalife. Ackman, of course, short the stock. He called it a pyramid scheme and that it was heading to zero. Icahn took the other side, then took issue with Ackman himself. Here's how it unfolded that January day as I was hosting halftime from right here at the New York Stock Exchange. The war of words between two hedge fund heavyweights is heating up with Carl Icahn bashing Bill Ackman over his short position in Herbalife.
Ackman does pump and dump. He's got one of the worst reputations on Wall Street. And I'm going to tell you this Herbalife is a classic example of what he does. And I'm telling you, he's like the crybaby in the schoolyard.
Carl Icahn thought, you know what, this guy's roadkill on the hedge fund highway. I'm never going to have to worry about this kid again. He's not going to even have the resources to sue me. This is not an honest guy, and this is not a guy who keeps his word, and this is a guy who takes advantage of little people.
I mean, I wouldn't have an investment with Ackman if you paid me to do it, if Ackman paid me to do it.
He's not used to someone standing up to him. I told Carl after the whole thing, called me up, and he literally said, you know, Bill, we can be friends now. And I simply said to him, I said, look, Carl, you are no friend of mine. And that was it.
I never said that I want to be friends with you, Bill. I wouldn't be friends with
Carl.
you. And I would. You said to me you'd like to be friends so that we could invest together.
Carl, I have no interest. Do you think I want to invest with you? Okay, let's move on.
I would invest with you
let's
if you were
move
the last man on earth.
All right, joining us now is Kenneth Squire. He's the founder and president of 13D Monitor and a CNBC contributor. Welcome.
Thanks for having me.
Can you believe it's been 10 years? I mean, I obviously can't. I still remember as that all was taking place, the delay that the sound was on for the trading booths behind us here, where it was the oohs and the ahs a couple of seconds after all of this was taking place. And I spoke with Carl, as I said today on the phone. I said, you know, what do you have to say about this 10 years later? He said, and I quote, Ackman never realized, and this is really interesting, Ackman never realized that he was right about Herbalife for the wrong reasons. And in this game, that can cost you a great deal of money. What do you make of that statement?
Well, you know, Bill, in an ESG world, it ended up being an amazing ESG investment for him. He lost money on it, but he really believed that it was a pyramid scheme, and he really felt for the people that were the victims of it. And the FTC ended up levying the biggest fine ever at that point, $200 million that went directly to the victims, in their words, of Herbalife. And I just think that Bill never thought that the stock wouldn't go down, you know, with that type of news.
He still maintains that it's a pyramid scheme. Mm-hmm. He tweeted, you know, a thread on the 27th of January. So just, you know, a few days ago, he says, quote, after we covered, I learned that the FTC had commissioned a study by an economics professor in which he had concluded that Herbalife was a pyramid scheme based on an analysis of distributor quit rates. The study has never seen the light of day. Twitter, please find it. You know, obviously, Bill had a couple of really tough years right around this time. And then he recovered fairly well. But this episode really changed, I think, how he operates in the future. There's no more single stock shorts. Mm-hmm. And certainly, I think the industry itself isn't as public as it used to be about just what they're doing in general.
No, I agree. I think that he's not, like you say, he's not doing the single stock public shorts, but he's also being a quieter activist, and he's becoming more, you know, cordial and constructive and just trying to be a helping voice for boards.
I feel like in many ways this episode marked like peak activism. At that point, it was almost every other day that there was an Icahn or a Singer or a Jeff Smith or a Loeb or whoever, a Peltz, all, you know, circling the wagons around these various companies. Where are we today?
Well, I think activism actually peaked a little bit later than that, before Valiant, but today we're coming back. And, you know, in the last 4 or 5 years, there was a lot of growth stocks, and it wasn't a great time for activists. But things are changing now, and I think we see a lot of activism on the horizon.
Is it because of how dislocated the markets were? There are companies that are now ripe for activist activity?
Well, certainly when the markets are down and the gap between price and value gets increased, there's a lot more opportunities for activists. So that's definitely one of it. Also, you know, it's a lot easier to spot bad management and flatten down markets, and easier to get support of other shareholders.
What's amazing to me, too, is we talk about sort of the evolution, I guess, of Ackman and how he does things now. Carl's going to have a birthday in a couple weeks, right? As he gets up in age, he does not slow down.
He's incredible. He's a real outlier. You know, activism, as you know, is an incredibly time-consuming strategy. Most activists can do 3 or 4 at a time. Right now, Carl and his team are on the board of 13 companies that they have an activist investment in, which is just incredible. Starboard, who's an amazing, prolific activist, has 5.
And you hear, I mean, Starboard's in the news, you know, these days with Salesforce, as is Elliott. And I guess you're just going to continue to see more of that, and nobody follows it closer than you, which is why we wanted you here for this.
Well, thanks for having me.
I appreciate it. That's Ken Squire joining us, 13D Monitor.